Hello, this is Cynthia Fick, and this is the market update. I hope you guys are feeling great out there. Just want to let you know that I'm working from home with COVID right now. We went on a trip, my mother and I, her bucket list to go on a cruise to Alaska, and had a fantastic time, but we both came back with COVID. I found out late last week. And so anyway, we're on the upswing, but just want to be aware, anybody planning a cruise or going on a trip, you just might want to start wearing a mask again, because I think that is becoming more prevalent. So I'm going to keep today a little short and sweet and kind of focus on what's happening in the market. And that is, as we all know, we had the pullback that we've been talking about. I've been, saying this was going to happen. Wasn't sure how deep or how long it was going to be, but we're definitely getting the pullback, and that's normal. That's healthy. Hasn't knocked us off track. It's just, we were up a lot so far this year, and a little give back is not unheard of. And so I think that's what's happening right now. And I'll show you why I think that is the case. This is the last time we had a long-term secular bull market, started in 1977. And as you can see, it's not a straight shot up. Most definitely, even though the general trend is up, we definitely had some times where we, did some pretty big corrections. And as long as we held, this is the 40-week moving average, as long as we held that, we were still a-okay, which again, we've done, recently with the 2022 stock market downturn. I'm really going to try to get everybody to start thinking about long-term right now, because when we were in it, when we're in that 2022, the ups and downs, the kind of the downward market, we needed to watch every single move in the market and what the Federal Reserve was saying and all those kind of things. But now I think we can kind of rise above, knowing that we maintained our long-term secular bull trend, and that has not changed. So again, this is a picture of what happened in the last long-term secular bull trend we had from 1977 to 2000. Here's right now, and again, we're looking at the S&P 500 weekly chart, and here these are moving averages, and here we are trading down into them, which again is the little touchback that is absolutely positively healthy and normal for the stock market. You can't go straight up forever, because then you'll have a much bigger crash in the long run. So again, the primary trend is up. The trend for investors is favorable, and it would be great if stocks could go up every day, but they just can't, because again, nothing can go up forever. There's a cycle to everything, and we were kind of due for a little bit of a pullback. Where will this market go, or where might it settle? There is a gap to fill closer to this 7.77% level. It's a that's on the downside. Not saying we're going to get there, but just keep that in the back of your mind. Jackson Hole is this week, and the Federal Reserve is not going to talk about raising interest rates this week, but they are going to meet in Jackson Hole. Last year when they met in Jackson Hole, inflation was up over 9%, and now it's a little bit over 2 or 3%. So things have changed a lot, but they're going to be talking about how can we sustain this great growth that we have in the economy, the very tight labor market that we have, and lower inflation. And so it's going to be interesting to see what they come up with. I guess the next time they'll be talking about raising interest rates will be in September, and we will see what they do. One little thing I'm going to talk about a little bit more next week is how can we sustain this higher growth and still have pressure on wages. There's wage inflation, a little bit of it. It's productivity of our workforce. Last year, we had the worst productivity in 70 years. And now it's some of the best we've had in a very long time. So I think that may be a factor there. And I'll be talking more about that next week. Stay healthy, stay well, and I'll be back in the office soon. But be assured, I'm still working for you. So you take care, and I'll see you next Tuesday. Bye-bye.